I'm sorry, the condo association, let me slow down a second. The condo associations, you have to wait the 30 days, and the homeowners, you have to wait 45 days. And then there's a second notice that, again, you have to wait. So now we're talking, at best, 60 to 90 days out, and with a condo association, now we're 2 months behind on, and probably 3 months behind on assessments. And if it's not paid after the expiration of the notice of intent, then the claim of lien should be filed. And this does numerous things for you. One of the things that it does in bankruptcy court, the bankruptcy judge, if the association does not file its claim of lien, the judge can say, okay, you didn't do what it is that you were supposed to do, and I'm going to switch your lien from a secured lien, which it is, to an unsecured lien, which means it's the difference between the association getting paid and the association not getting paid, which in my humble opinion is what you should be doing, is getting those assessments paid. Again, if they remain unpaid, go ahead and file that notice of intent to foreclose. That's the last statutory step that you have to take in the process. Now, at that point is when you should sit down with your attorney and have a heart-to-heart as to what it is that you're going to do. You've gone through the process, here's where we're at. It doesn't mean that because we're at this point, let's just go ahead and file a lien foreclosure action, because there's a lot of other things that come into this equation. Are they in bankruptcy? Are they in mortgage foreclosure? There's other things to look at. What's the amount of it? But the thing that it does is it sets it up when it finally gets to me, I can move forward on this process and we're not waiting. One of my biggest frustrations is the average for a bank to foreclose on a mortgage is 858 days. That's over 2 years. Typically, if the banks file a mortgage foreclosure action, I recommend that the association not go forward, and I recommend that I do different things. But think about that. This individual is probably past due. It's probably taken the bank about a year to figure out what it is that they're going to do anything. So now we're talking 2 or 3 years worth of past due assessments that are not getting paid. In my humble opinion, the association should try to keep their assessments down below 1 year's worth of assessments past due. I just use that as a general formula, and you can figure out an exact formula for your association. But the reason I use that number as a general figure is typically that's what the association is going to get paid when the bank forecloses. So if you can keep that down below a year, the association is going to be made whole, and off you go. You get a new, once the bank forecloses, someone else is paying the assessments, and you're going to get paid. Some of the things that you can do as a consideration rather than going forward with a lien foreclosure immediately is you have a suspension of the use of rights. I always question the effectiveness of that, but we set one out one time in a condo association. We cut off the use of the tennis courts. Literally the next day, after the gentleman lost, I think it was the same day, that we denied his access to the tennis courts. He showed up to pay because that's why he was at the association, was to use the tennis courts. So you never know. If the property is being rented, you can send out a tenant rent demand. Those are a really good option to get the association paid, because that's what the landlord is relying on to pay the mortgage. He's just cutting you guys out of the process. Excuse me, I'm just getting over a cold. If you do decide to go forward with the lien foreclosure action, you have to remember that the vast majority of these things, or that these things, first of all, they settle. Someone's going to call, someone's going to work something out. The other thing is, this is sold at public auction. It's not sold at, it's not given to the association just because you foreclose. sold at public auction, which means anybody can bid on these properties. So it doesn't necessarily mean that the association, excuse me, it doesn't necessarily mean that the association is going to get it. It means they have an opportunity to get it. In addition to that, typically the sale date occurs between 30 and 120 days from the final judgment, which again gives the homeowner, the association member, an opportunity to make good and get the property back. But what it does is it lets everyone know that the association is serious about getting paid and moving these things forward. If a third party buys it at the sale, typically what the association does is they have a credit bid. Let's say that $10,000 is owed on the owed in past due assessments. The association gets a credit bid for $10,000. If somebody else comes in, some third-party investor, bids $11,000, the association gets paid. They don't have the property, they get 100% of their past due assessments, and off they go. Sure. Another option that the associations can use is a deficiency judgment. Now, deficiency judgment is not much more than just suing them in small claims court as opposed to foreclosing on the property. I do a lot of landlord-tenant work, and one of the things that amazes me is if you're going to get thrown out of your property because you can't pay the rent, there's really not a whole lot of use of chasing them. But I have a landlord who's been doing it for 40 plus years, and he always insists that I get a final judgment and have it recorded. He doesn't chase them, but what ends up happening is sooner or later someone goes back and decides they want to clean up their life. So what they do, they try to get credit or something else, and they say, hey, there's a judgment hanging out there, you need to fix that. So the vast majority of the time, someone will call him and say, hey, I need to pay off that judgment so I can get my credit fixed. And he gets paid. So there's more things you can do other than just go forward with a lien foreclosure. But the thing is, if you're not pursuing these things, then they're just sitting there and festering. And it's not, like I said at the beginning, it's like a cheap bottle of wine. They're not going to improve. They're not going to get any better. It's just going to get worse. The bank foreclosures and the bankruptcies. I really believe, and I'm not just saying this because I charge money to do this, even the homeowners associations where the assessments are typically fairly low on the just a yearly assessment. But you should file an answer to all of these and do a notice of appearance and file your claim of lien within the bankruptcy court. Because like I said, it takes 858 days for the banks to foreclose these things. If you have an attorney who's actively pushing this, in other words, your association counsel pushing this forward, these can happen a lot quicker. So if you're not answering them, you get a default against you, and it sits and festers for 3 years. In fact, I just had one the other day. It's been sitting for over 5 years. And I'm just getting involved with it now. It's been sitting for over 5 years and nobody's done anything on it. So the problem being, if you're not in there and you're not doing something, if the bank's not moving it forward, if you didn't file an answer, tough. You can't do anything now. Where if you do file an answer, see what the bank is going to do. If they're moving it forward, great, don't do anything. If they're not, there's things that can be done to move these things forward. At the very least, once you get to that lien foreclosure process, you should sit down and have a long heart with your counsel so you can make an informed decision about getting these assessments paid. And I'm being told that I'm short and out of time. Thank you very much. I appreciate your time, and we're going to take questions.
Thank you, Stephen. Our last speaker this morning is Jana Jackson, who is the Customer Service Advocate at Citizens Property Insurance Corporation. Jana's primary focus is to serve as a liaison between Citizens business units and the Consumer and Agent Services Department on consumer initiatives. In this capacity, Jana is responsible for analyzing current practices and work products of business units at Citizens that affect customers and agents to help identify deficiencies and make recommendations for improvements based on Citizens' corporate mission and strategic goals. Jana also handles and participates in resolving escalated consumer or agent issues. Janet has over 4 years of experience and 10 years in customer service. At Citizens, Jana has held various positions within the Consumer and Agent Services Department, including positions in the Customer Care Center and Agent Compliance. Jana graduated from the University of North Florida with a Bachelor of Arts in English and has obtained the General Lines 220 license. And Jana?
Hello, as he stated, my name is Jana Jackson, not Janet Jackson, but Jana Jackson, and I am representing Citizens today. Oh, can you hear me now? Okay. Okay, sorry about that. Yes, as he stated, my name is Jana Jackson, and it's a pleasure for me to be here with you all today. I really enjoy getting to meet our policyholders and our agents and talk with them about, current issues, day-to-day issues, and talk about Citizens as well, because there's always changes going on at Citizens Property Insurance. I know last year Christine Ashburn spoke here, and she really wanted to come this year, but unfortunately because of her schedule, it actually just did not permit her to be here this year, but she did just want to let you all know that she wished she could have been here this year. I am going to start off speaking, first of all, just a history about Citizens in case you're not aware of the history and what type of company Citizens actually is. Just for me to know, how many people in here are actually Citizens policyholders? Just raise your hand. Okay. And how many of you actually write for Citizens or an agent? Okay, so we have a couple in here. So most everybody is familiar with Citizens on the policyholder side. Basically, just to give you a background of Citizens, we are a quasi-governmental entity, meaning we are not your everyday insurance company that you see in the private market, like State Farm or Allstate, and there's many more that I can name. Citizens, we were created by the Florida legislature in 2002, May of 2002, and basically we were created to help homeowners and property insurance owners get insurance if they can't obtain insurance elsewhere. So that's the main purpose of Citizens. Over the past couple of years, I'm sure you've noticed that we have grown quite a lot from what our original purpose was intended to be. And that still is our purpose, but just due to different legislative changes and things like that, we've actually increased a lot of our policies. But we are now starting to decrease some of the policies that we have, which that I believe that is a good thing for the state of Florida, because that is what we were created to be, just to insure people who really can't get insurance in the private market. I'm just going to basically go off and just start with renewal pricing. I know some people maybe have some questions about that. As far as our pricing goes, because we are not in the private market, our rates are mandated by the state legislature, meaning we cannot increase our rates per year over 10%. So basically, we have a rate cap on our policies about 10%. So that basically influences the amount of premium that you're going to pay, but we still are intending to increase our rates, mainly because honestly, Citizens rates are not actuarially sound. What that means is basically we should, for the amount of risk that we take on, the rates that we charge for policies should be a lot higher, just because of the risk of storms and hurricanes. And I've heard a lot of people say, well, we haven't had a major storm in Florida since 2006, and it's 2014 now, and that is true. We haven't had a major storm, thankfully, but it's not really if we have a major storm, it's when we have a major storm. So that is why we have to continue to build up to have our rates actuarially sound, because It not only benefits, well, basically it impacts everyone in the state of Florida, taxpayers, because we are a state-funded company. So even if they're not Citizens policyholders, it still affects the taxpayers of Florida as well. And of course, Citizens, I'm not sure how familiar you are, but we do offer personal lines and commercial lines policies. We do offer condominium association policies. I know a lot of you are board members for certain HOAs, whether condo or just a homeowner association. So we do offer some commercial policies for that, or just commercial residential, non-residential policies. I did just want to mention, these are some of the main new changes at Citizens that have been in the news that you probably have heard of. Wanted to mention the Property Insurance Clearinghouse. How many people have heard of that in the news, or heard of that just from your neighbor? Okay, wow. So a couple of people have heard of that. Wanted to mention that because this is something that was enacted by the state legislature this past session in 2013, and it just went into effect January 27, 2014. What this is it basically encourages other companies, number one, to come to the state of Florida to compete with Citizens, private market companies. And what it does is it requires your insurance agent, if you go to your insurance agent for a quote for a policy, right now it's just for a homeowner's policy, which is an HO3, and for personal lines. But later on, we do plan to include other policy forms, and in the future, they do want to include commercial lines as well. But basically, you go to your agent, he gives you some quotes. If he feels that you cannot get insurance anywhere else, or the insurance in the private market is 15% higher than what Citizens offers, then statutorily and Citizens rules allow you to come with us. You're eligible to come with us. What the clearinghouse does is basically your agent fills in all of your property information. It's called the clearinghouse application, and it puts it through a comparative rater. And other companies, private market companies that have agreed to participate in the clearinghouse, basically, if they are willing to offer you insurance coverage, your agent immediately, once he submits all of that information, he will immediately get quotes back if there are any eligible in the private market. And then he can sit down in front of you, he or she, and you can compare coverages and compare companies where you would want to go. And why I'm telling you that is because Citizens, as I stated before, we're not in the private market, and we are, a lot of our coverages and things that we are actually allowed to do are statutorily driven. So the private market has a lot more freedom as far as the coverages they can offer. They can offer a lot more broader coverage than Citizens can. So that's a benefit for going in the private market. And they are all backed by the Florida Insurance Guarantee Association. If the state of Florida has approved them to do business in Florida, then they are backed by the state of Florida. I know that's a common question that I get from a lot of people. So also, part of going in the private market versus the Citizens, you have less risk of assessments. Meaning, if you are a Citizens policyholder and let's say during storm season, Citizens gets hit by either a small, maybe 5 or 6 small storms, but that still accumulates a lot of money that we have to pay out for claims now, or we get hit by maybe 2 or 3 major hurricanes. If Citizens has a deficit in any one of our accounts, any one of our personal lines accounts, any one of our commercial line accounts, then what the state has allowed us to do is we can charge all Citizens policyholders up to 45% in assessments for 1 year. And that's just Citizens policyholders. So, I hear from certain policyholders, well, I decided to go with your company because, company B's premium is 20%, larger than your premium. So it's 20% cheaper, so I'm going with Citizens. And since it's above that 15% mark, I'm eligible to come with your company, which is completely, that is correct. But you have to remember, when you're going with Citizens, most of the time, compared to a private market, there is less coverage. It's just less coverage. We're not here to make money. We're a nonprofit organization. So we're different than the other private insurance companies. Also, 20%, yes, it's cheaper, but if you get assessed 45% of your premium, citizens, if a storm does happen and we do incur a deficit, then it really wasn't the best choice to come with Citizens Property Insurance. So the clearinghouse coming to Florida, and this rolling out this past January, it really will help bring new companies, new private market companies to Florida, and increase competition, which is what the goal was for bringing this to Florida. I don't believe a lot of you have heard of it yet because it really isn't affecting condos yet, but in the future it very well could affect them on renewals as well as new business for the clearinghouse. Also, another initiative that the state of Florida has been doing and is still doing, and you may excuse me, hear it in the news every now and then, is Citizens is always trying to get rid of my policy to some other insurance company. That is called Depopulation the Takeout Program. And that, again, was created by the state of Florida, and it was created by the state of Florida to basically take out policies from Citizens to other companies where they're willing to insure that particular property, that particular risk. So I'm not sure if any of you have received any of these letters, but what happens is all of these companies, number one, they're approved by the Office of Insurance Regulation. So they are approved by Florida, and they send a wish list to Citizens. What Citizens does is we run it through a zip code algorithm, and once your agent has agreed to write with this company, then at that point in time you'll be offered a letter of coverage from that particular company, and then Citizens will also send you a letter and state, effective such and such date, you will be assumed by this policy. And you do have, as a personal lines policyholder, you have about 30 days to opt out of that if you want to stay with Citizens. But we do always encourage people, do your research or ask your agent about this particular company. I know some people, they've never heard of company Y, and I get this a lot. Well, I've never heard of this company, so why do I want to transfer to this company when I know Citizens? I know that very well. I know that it's a state company, state entity, and I'm more comfortable staying with Citizens than Company Y because I don't know anything about Company Y. Well, that is why, number one, your agent is there for. Your agent makes commission off your policy. So, don't be shy in talking to your agent. That's what they're there for. They are your agent. They can research those companies. They can look up those companies. They already may have knowledge of those companies, and they can tell you about those companies. And you can also look online. I believe the OIR has information about those companies as well. So I always encourage people, before they decide to opt out of those assumptions, just do some research to see if you are comfortable with going with that company, because honestly, most of the time you're getting a better choice. You're getting better coverage, and it's less risk of assessments. You're not getting that first initial 45% assessment, which is major. As far as Citizens, because of depopulation, in particular this past year, from the end of September to December, we really depopulated a lot of policies. About 500,000 policies were removed and put in the private market, and that's huge for Citizens. Just in a span of about 3 months, that those policies went to the private market. So we are actively making strides to decrease the amount of risk that we have. I believe we just went under 1 million policies. So we no longer have 1 million policies in force, which is huge because in the past we've had a lot more than 1 million policies. And again, that's good for the state of Florida as a whole, that there's less risk placed on the burden of taxpayers and Florida taxpayers, and it increases healthy competition within the private insurance market. That's pretty much all I have. Well, thank you.
Thank you.
I'd like to again thank everyone for coming today. I'd like to especially thank our speakers, our event sponsors, and we look forward to seeing all of you next year. And I can tell you that we will be having it right here again, the same facility. The people have been great, and I think you all agree that the facility is an excellent facility to have this. And it will be on February 19th. And a couple of things we might try to do for next year. We might do one thing a little different. That's my birthday, so we might throw something in, maybe bring out a big cake next year. And I think next year for one of our speakers, we're going to try to, because a lot of the questions always goes back to, well, that's what the legislature had done, and we have to now follow it. You heard the attorneys say that, the CPA say that. And the last speaker from Citizens just say that. So maybe we'll try to have one of the legislators here also, have them go last, so then at each time when the representatives before say, well, we have to follow that because the legislature did, well, maybe they'll be able to go right ahead and answer why the legislature did it. And I'm sure they have good reasons. I mean, whether we'll totally agree with it or not, we'll see. When we leave right now, lunch will be set up where the breakfast was earlier. There'll also be food upstairs if you miss it down here. For all of you that will be staying for the class, that's set to start around 12:45. If we're running a little behind, say, from the lunch, it could go as late as 1, but no later than that. So figure 12:45 to 1, the certification class will begin. And again, thank you all very, very much.